Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Tim Levett, chairman of NVM Private Equity and manager of the Northern VCTs. Hello, Tim.
Hi, Alex.
First off, can you give me a bit of background about NVM and your own experience?
NVM was formed in 1988 by three of us in Newcastle, originally managing an investment trust and subsequently a small LP. In 1995, the VCT legislation was enacted and we have grown very steadily. Since then, we now manage 470 million, of which 260 million is in VCTs and 170 million is in an LP fund doing MBOs. As to my background, from the outset and right up until around 2006, I was the Chief Investment Officer and responsible for building the team and the portfolio. And then in 2006, I brought on board more people and relinquished the role of CIO to Martin Green, and I've been the chairman since.
And what do your VCTs aim to do for investors?
Our VCTs aim to give long-term total return by way of maintaining the NAV per share and paying dividends. So VCTs have a unique opportunity to pay capital gains out as dividends tax-free, and that is the reason that many of our shareholders have remained with us for several decades.
You raised £60 million last year. How much are you raising this year and what are you going to use it for?
We're looking to raise £20 million by way of a top-up issue in each of the three funds, 6.6 million in each. The reason we're looking to raise money is that post-raising the £60 million fund last year, in the budget, new rules came in whereby 80% of the money raised had to be invested within 2 years, which effectively means you cannot store money. Now, the way that the VCT portfolio is made up is that in most cases the investments require follow-on investment, and that follow-on investment is likely to be required in 2020, at which point we would have deployed all of the capital that we have got on the balance sheet at the moment. So the new raise is entirely a consequence of the change in the rules.
And can you give me an idea of some of these newer investments you've made and why you came to those decisions?
Indeed. So I'll give you three examples. The first is a company called Northrow. Northrow is a software business producing identification software, know your customer, anti-money laundering, right to work in the UK, servicing both the government sector and obviously the public sector as well. And we invest in this business because A, we like the market, B, the software itself was well developed, and thirdly, the management team and the investors already in there gave the business scope for further rounds. The next one is another software business called SHE, known as She. She is a health and software business. This business was acquired by a really able guy with a very interesting track record both at McKinsey's and also in government, which he acquired in 2011 and has been turning around since then. We put money in to go out and develop the market in the USA. The third company is not a software business. This is a leisure recreation business called Climbing Hangar. Climbing Hangar is a bouldering climbing facility started originally in Liverpool, now rolled down into Plymouth and to London, and we've put money for a rollout, and the reason we backed it is that bouldering is a fast-growing recreational activity. The team we backed had already proved the model in Liverpool, and they had with them a team, legal and property team, who'd rolled out for one of the big gym companies and knew how to find sites.
And what about the more established companies? Anything doing particularly well?
Yeah, certainly on the general point, we have 37 companies still in the portfolio with a value of 106 million, alongside 22 companies in the VCT portfolio, the new rule portfolio, valued at 65 million. So a lot of scope in there for realizations. We have two in particular which are doing pretty well. One, a business called Agilitas, which is a service business providing assurance and spares for the data sector. So the second one is Lineup, which is a software business providing software as a service software to the advertising and publishing sector, managing the whole compilation and commercial side of advertising. This was a spin-out from Metro Group some time ago and has grown really steadily and now has a very established client base in the USA and the UK.
So with all these good established businesses, is there a big temptation to just keep hold of them?
Well, there's always a temptation, but we're not succumbing to it because history has taught us over a long while that when companies are primed and ready to sell, the thing is to sell them.
And have there been any recent exits?
We sold a business called Love Energy. Love Energy is a company set up to provide a service to SMEs to switch energy providers and get a better deal. And we built this business as a development capital deal over the last 4 years and sold the company to LDC earlier this year and made 4 times money return.
The recent dividend has been trimmed a bit. Now, is that a sign of things to come?
It's a sign of the fact that the new VC portfolio is predominantly in ordinary shares in early stage businesses, and therefore the revenue return is going to reduce because obviously we don't have the loan stock in place as we do in the MBO portfolio. And we believe that dividends will be more volatile in the future, reflecting capital realizations in the new VC portfolio. However, we've set a target of maintaining a 5% yield at the same time as trying to keep the NAV per share as it is.
And finally, so I'm going to put some money in a VCT this year. Why should I choose you?
You should invest in NVM's VCTs because NVM has a long track record of nurturing and growing the businesses in the portfolio. With regard to the new team making investments, Charlie Winwood, who joined us from my group, IP Group, and myself both have a long track record of doing early stage deals, and we have recruited a further 8 people in the last 18 months, both from a technical side and also experienced early stage investors to deploy the capital. We have a track record of looking after our shareholders and maintaining a steady dividend and a total return, which we intend to do in the future.
Tim Levett, manager of the Northern VCTs, thank you very much.
Thank you, Alex.